Traders, Kyle from K Capital here. Hopefully everyone's doing fantastic. It's about 8:43, the 12th of October. Boring day today. Boring day all week so far. It's been an interesting couple weeks, at least for the last week and a half. We saw a nice rally over the past six trading days in the Dow. What we're looking at here is still a nice recovery from the lows of the 15.6 to 15.8 range. It's actually pretty surprising. I would expect a pullback at this point, really, in the trend. But as you can see, the EMAs are all pointing up, so it's a bullish sign. At this point, though, I definitely expect at least one selling day to come. We really haven't had any type of downward movement or price action over the last couple of days. With the 200 EMA coming up as serving as significant resistance, I would definitely expect a pullback at a minimum at that level. So that's right around the 17,280 range. Do we trade up to that level? We can. I mean, obviously, I think we hit that. It's just a matter of whether we pull back before that or at that point. So I think we're going to pull back. I think this recovery has been great. We've definitely found a nice, decent group of swing trades that we've entered over that time frame, which I'll get into in a minute. But nonetheless, I think it's still a very bearish, if not neutral, market. I don't really want to be taking too many chances here. Obviously, people can make the argument that this is just a bull retracement. If we take a step back, we can look at the overall trend. And, we can see a pattern to where obviously this is really just a one-time affair where we're pulling back in a bull trend and we're going to recover. It's not worth the risk, in my opinion. And it's not really worth the risk to be 100% bullish because it really hasn't tested the 200 EMA and broken through that many times over the last couple of years. So anytime people really say, oh, it's just a bull retracement, I'm still bullish. Granted, that's a good point, but, typically we've tested this point several times over the last couple of years, and then we rallied. Well, we broke right through that. So I'm definitely still bearish. It's just not worth the risk. Over the last couple of years, we saw some great upside in our bull calls. And again, I think, over the long haul, over the next 6 months, do I think we recover to test 1800? I do. Right now, I think it's still, play it safe. It's still best to play it safe. So if we go back, let's take a closer look at, a few of the other indices first. Obviously, what we mimic on a day-to-day basis and what our benchmark is the Russell 2000. Really just a snapshot of the overall small cap space. So you're going to see a similar pattern here in terms of the Russell that you would see in the Dow. And really, if we want to zoom in, let this refresh real quick. Similar pattern. We've rallied since the prior lows. We're testing the EMA, specifically the 20 here. And I think, we're going to see a pullback here. This is definitely more bearish than the overall Dow. Typically, the small cap space usually is a leading indicator of the overall market. Logic being that fundamentally these companies aren't really as secure as the large caps. So you're going to see movement to one side or the other. That may be a change in trend happen first in the small cap. So right now, I think it's a bearish candle today. I think we pull back, which may be a leading indicator for the overall market, including the large cap. So obviously, these are the two indices we watch. If we want to take a deep dive into our specific alerts, first and foremost, the two swings that are long term that I love, MGPI, which we're sitting on a little bit of a profit right here as it bounced off of the 200 EMA. This is definitely a nice bullish indicator in terms of the 20 to 45 EMA serving as pointing up, being all crossing here. Similar pattern here to where we bounced off the 200 EMA. We rallied, we pulled back, and then all the indicators pointed up, and it rallied all the way to 19 from 15. I think this is going to occur, or basically make a similar pattern. I think we rallied off the 200 EMA here, and I think we're going to more or less see a new high, at least at 19. Our initial target for the long term, which is probably a month to 4 months, is 30. So again, this is going to be something that I think is going to take a little bit of time to develop, but I really love this chart. So it's something that we're going to obviously continue to watch here, and we're definitely going to hold this through earnings as we're approaching earnings season. I'm going to outline that over the weekend coming up, so we have an idea of what we can expect in terms of earnings for this particular stock. Next, which is another stock that's similar to this in terms of the logic of why we've entered, is a CXM. Let this reload real quick. Apparently my Wi-Fi is ultra slow today. No idea why. There we go. All right, so if we zoom out a little bit, we can see the overall trend, and we touched base on this, a few times. So basically, this has been completely beaten down over the last couple quarters. It's formed a nice base here over the last probably 2 or 3 months. It rallied through the 200 EMA. Naturally, it's going to pull back and bounce off of that, which is really our confirmation that, that is a solid level of support. And then it ricocheted right off of that and rallied up to new highs. So we're sitting on, I think, a 5% profit so far in this. Profit taking at this point is really, understandable after a rally from 1950, to 21. Obviously, people are going to take profits. So it's something that we're going to continue to hold and watch closely. But our initial target is 25. Frankly, I think this could absolutely see 28 to 30. Again, it's just going to take patience. In this type of market, we're going to want to have longer term holds, just because the market's going to be too volatile in the short term to really warrant, any type of, I don't want to say day trading, but any type of entry in and out to get washed out in terms of our stop. So we're going to be patient with this. Definitely hold this one through earnings too. I think earnings, if I'm not mistaken, are the 2nd of November. So we still have some time, but we're going to hold it through this. I think fundamentally, this is a story that I think is slowly developing in terms of it's formed a nice base here. Obviously, the technicals sometimes can be a leading indicator of the fundamentals. So I think it's something that, this is one of those stories to where we're going to see a stair step, so to speak, up to 25 or 26. So right now was the first step. It's going to pull back, and then it's going to continue to rally all the way up to 26, which would be a great profit for us. So it's another one that it's going to take some time to develop, but again, I'm confident in. Going to one of our major winners right now, and honestly, this is pretty much an ideal play right here, given the market. Right now, we're sitting on, I think, a 15 to 17% return on this, given the level of activity in the market over the last couple of weeks since August. I think this is great. We're making a lot of money in this stock right now, so it's really a good play for us. I think we entered in the 4.6 to 4.8. Now we're in the 5.6, so it's perfect stock. As we alluded to in a lot of our our teachings here, the pop, drop, and go pattern is something we trade often. So it popped here, high volume, pulled back to the middle of that candle, and then rallied. And it's just trading right along its EMA. So it's really a nice stock. It's hitting some resistance here, but that's understandable. The one key thing that I was kind of concerned about was this gap up. It filled the gap the next day, which is great, and then rallied. So it's really a perfect trade. We're going to continue to hold this. I think resistance or support I'd be concerned about if it broke the level of 1540 to 1530. But for the time being, we're going to sit on this nice profit and just let this play out and see if we can hit our initial target of 6. So congrats, anyone that was in this. This is a great play for us, a great trade. Again, given the overall bearish market, it's something that I think as a swing trader, this is really an ideal setup that we love. So it's good stuff. Congrats to anyone who's in this. Going on to our next one, EMKR. This one has been a little bit frustrating in the sense that it rallied past our initial target, or not our initial target, but it rallied past our initial level of support and really has pulled back ever since then. So what I mean by that is similar, pop, drop, and go pattern, rallies up. We wait for the pullback, we stalk the stock, and it pulled right to the midpoint of this candle. We went long, and it's rallied, in that level ever since. The good thing is that it's holding support. So it's holding the 1657 to 665 range. What I'm really watching is the level of volume when these pull back. So today was really, really minimal in terms of the pullback on the volume. It was pretty low on the last couple of days at the end of last week. What was good, and if you look, is it rallied on really large volume. So what that tells you is really the people that are coming into this are buying this up and waiting for the dips. And so really we have to wait till all the buyers are cleared out of this level before we're going to see $7.50, $8 here. But nonetheless, if we want to zoom out, it's really a great story here. Over the last couple months, ever since this broke the 200 EMA, it's really just followed that up. And I think honestly, this is going to catch up in terms of the 200 EMA catching up to the price, and it's just going to continue higher. Honestly, I think we see 10 in this by the end of the year, unless we pull drastically on high volume past our mental stop loss. We're going to continue to hold this. Our initial entry is 705 or 704, I think. If anything, it might be something we add. As you can see, if you add at any time this touched or came close to touching the 200 EMA, you'd be sitting on a great return right now. So I think this is a trend that continues over the next couple of years, or next couple months, excuse me. Similar to that is Jack. Fundamentally, Jack came out with a sell side target of 11 last week. Obviously, that's a good sign. Their inventory in terms of some of the products they're offering going into the Christmas season, which is one of their busiest times of year. They've expanded their inventory, so that's obviously a plus. And most importantly is, again, the 200 EMA. It's holding that level of support. So right now, if you're a swing trader, you really don't want to sell at this level. Granted, we're, I think, down 75 cents here versus our average price or our average entry. But it's not necessarily a time to sell because you have very, very strong levels of support here. Now, if we break that, obviously it's time to exit. And the one thing that could be concerning is we have earnings in the next 10 days. But again, we're going to set our stop loss below the 200 EMA. We're going to play it safe. And if we get stopped out, we get stopped out and we move on to the next play. But right now, I think this is the type of trade that really isn't worth selling just yet because the 200 EMA has continued to hold several times over the last couple days. So again, I think it's something that's just going to take patience, but we're going to watch what happens on the earnings call, and then we're going to move on after that point if it ends up breaking down and we get stopped out. Finally, I think we have one other play that I'm watching from a swing trade standpoint to the long side. We have SD, but I'll get to SD in a second. So TSO is something that I've been watching. That's a large cap. It's not a small cap. But the reason I was watching this is because this is a energy-related stock that has done really well over the last couple of months, which is really surprising considering it's correlated to energy in some way and it's really not been beaten down like the other positions. But fundamentally, this has crossed 100. And when stocks typically do that, they usually rally very, very hard. And they do that because fundamentally, and just from a psychological standpoint, people view the $100 target as really just a good story stock. And you can think of the Googles, the Teslas, any stock that has really hit 100, typically over the next several months, has usually rallied, at least 20 to 25 to 50%. Now, is that always 100% given? No, it's not. And obviously, it depends on each specific case. But if you look, the stock has traded along its 200-day moving average pretty much flawlessly. And as you can see, it rallied recently, I think about 2 months ago off of that point. And now it's hit 100. So it's something to where I'm watching closely to see if we come back and test the $100 range. If we do, we're going to go long. And we're going to go long with the initial target of 110, which would be a 10% return. And then long term through the end of the year, if that does come back to 100 and we go long, I think the initial target for us, if we hit 110, is going to be 125 to 135. Again, just the logic being that, this is a great story stock in terms of, fundamentally it's very sound. It offers a dividend, which obviously as a swing trader, we're not really interested in, but we'll take it if we have the opportunity to take that extra cash. So right now I'm going to continue to watch this, see if we can get a pullback over the next couple of days. If we do, we will go long. Again, the target entry is right now it's 100. So we're going to see if we can actually hit that, hopefully this week, if not next week. And on the energy front, the same type of thesis here is SD. Obviously a different type of play here, and we've been in this for a long time. But one thing that's very interesting is the fact that they are delevering their balance sheet. Last week, they actually delevered, I think, $400 million of debt. They did, a bond swap to where they more or less have a target of 110 to where the actual bonds will be converted, I think, to common. I have to read up on it more, but fundamentally, I think this is heading in the right direction. There's still a lot of work to do here in terms of crude bouncing back to a level that really would be advantageous for this company. But the first thing they needed to do, and they're doing it, is really delevering the balance sheet. Technically, if we want to look at it, you can see a really tight consolidation of the EMAs here. The stock rallied off of the news last week, and now it's pulling back. Naturally, from a 25-cent return to 50, it's 100% return for some of the funds and other people that are trading this. So you're going to expect selling. Over the last 2 days, selling has been pretty low. But if you look, it's forming somewhat of a base over the last couple months. Their last earnings call, which obviously was in August, they had a huge call. Do I think they have that again? Honestly, I do. One concern heading into their earnings call is their hedges are unwinding. So obviously, a lot of these E&P companies are going to have hedges to lock in revenue with crude, natural gas, or NGLs. Eventually they're not going to be hedged because they're not going to want to hedge at such low prices in terms of the strip. So eventually those hedges will unwind and they'll be at risk to have lower revenue. I think Sandridge doesn't really unwind their hedges, or their hedges don't expire until I think early FY16. So that's why I think this call still will be another advantageous call in terms of their production. They're cutting costs and now they're delevering the balance sheet. So I think this is a good story stock in terms of a nice turnaround. When we hit 1, we'll be back to break even. That's my initial target based on the volume from last week, and the fact that they are delevering their balance sheet. I do think 25 cents is the new low, and I think we hit new highs. So I think it's something that we're going to have to be patient with. We have been patient with. It's just a matter of really the company continuing to turn this around, both from an OPEX standpoint as well as a financial standpoint in terms of their balance sheet. But patience with this one. I'm going to have a new watch list tonight. Obviously, I'll break that down in our dashboard for members. If you have any questions at all, please shoot me an email at kcapitaladvisors@gmail.com or Kyle Matthew at kcapitaladvisors.com too. Talk soon. Hopefully everyone has a great night. See you guys.